Good morning and welcome to this weekly market update from AGM Markets. Today is the 10th of December 2013. What I'm going to do today is go through some technical analysis on Euro, Dollar, Cable, Dollar, Swiss, Aussie and Gold. Just going to review what's been going on in the markets and go through any interesting setups that I think are in play. And yeah, just give an outlook for the rest of the week really. If any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is a 100 simple, and the gold is a 200 simple. We'll not make any trickles or recommendations in this video. Trade at your own risk. If you could please read our full disclaimer on our website, which is www.agmmarkets.com. Okay, then let's have a look at the euro. So what is going on in the euro? It's still the same setup that we've been speaking about for the last sort of few weeks really. I mean, this is the daily chart, and this setup is still in play and looks like it's just going to continue to grind higher. So we had this rally from well, this is pretty much from the start of July all the way up to sort of October time. And then we retraced down to the 50% retracement, pretty much to the pip, and buyers came in, and it's just been in grind higher mode really. It's not really been a really fast pop up, it's just been a fairly steady grind higher. We initially got capped at the 50-day moving average here, came back down, and then we bounced back up off the sort of 100-day really, and then yeah, we just closed above and it's just grinding higher now. So the buyers will want to be seeing this sort of 138.32s get taken out, and then that move will pretty much be done really. The other move that the sort of desperate sellers would be looking to sort of cap, it would have been that one there, that fib from the highs to the lows. We initially got the sell at the 50% retracement and that 50-day moving average, which is mentioned. But yeah, you can see the 100-day just popped it back up, and we didn't really get any sellers coming at 61.8 either. So it's just in grind higher mode really. For any sort of short-term selling opportunities, then it's all about the sort of round numbers really. I mean, if you look to the left of the chart, this was this sort of spike here was the sort of initial key focus selling point, but it's just taken it out like a knife through butter really. So the next sort of sell zone, you've got the 137.50s. Oops, that doesn't work. Typed it wrong there. Yeah, so you've got the 137.50s, which we're trading around that level at the minute. So it's the daily candle closes are really key here, because currently it's below. We've pierced through this level, and now it's trading below. So key sort of bull bear line for the rest of the day really, definitely. And yeah, and let's say if it closes above, then then look at the sort of 138s, 138.50s really, and these highs coincide. Yeah, they're sort of around 138, 138.30s really. So yeah, keep an eye on that. Yeah, I mean, so for meantime, you've got 137.50, 138, the key obvious levels there. But this 137.50 should definitely be an interesting level for the rest of the day. And let's say if it does come down, some people would be looking at this fib here, I would have thought, and interestingly enough it has some previous support at around this 50%, so it could be an interesting sort of confluence play up there for any sort of dip buyers, but I wouldn't be surprised to see it, if it does start to retrace, come back and test down this previous support, which is more of a key support, and also it coincides with the 200-day moving average as well. But of course we're a long way away from that, so you're looking just in terms of short-term plays, and it's all about 137.50s for me on this euro-dollar chart. Cable on the daily, well, on any time frame, it's similar to euro. It's just been grinding higher really. If you look at this weekly chart, it really is just flying high. We spoke about the sort of 2012 highs. They got broken, and it's just really taken off. It's now sort of eyeing the 2011 highs now, although we're still a couple hundred pips away from that. In terms of daily, if it does come back down, then we've got the previous resistance around here, which could turn into support, and that is at the round sort of 132.30s there. And if you're looking at a shorter term time frame, yeah, so you can see that quite clear on the 4 hour there. Yeah, 162s, or if you want to use the 4 hour, then we had a candle close above that one there, so 162.46 is there. And then you've got another previous support around here as well on the 4 hour, which is 163.20s. So yeah, I mean, if you look at this 4 hour chart, the previous 4 hour candle was nice reversal candle we had there, and it's starting to sell off there and come back down. Short term buyers will be looking at this sort of if you look at these highs here to your left, then we're pretty much testing that at the minute, which is the 164.30s. But I think a healthy retracement, wouldn't be surprised to see us come back down to these 163.21s and see some interesting action there. And yeah, that's pretty much it in terms of K1. If you look at the 1 hour, then yeah, a lot of people will be looking at this sort of fib here from that sort of previous swing low to that swing high there. And 50% comes in at 163.78 there. So some interesting levels on this cable. It has been very, very technical chart, to be honest with you. It really has been nice. Look at this sort of nice lower wicks around here, lots of bounces up, and then this sort of resistance around here to the left. It first came back down there and then popped back up. Nice reversal candle there, and it came back down. So yeah, just play the levels really on cable. They've been playing out very nicely indeed. Dollar Swiss, it's just been grinding low. I think we spoke about this fib in last week's video. This is the daily chart. So this fib here from, I mean, the low, sorry, the high of the fib was 0.9458, the low 0.8890s. So we sold off. We came back up, tested the 61.8% retracement, and it's just rotated towards the downside. And we said this, wouldn't be surprised to see this fib get fully played out and take out the lows, and it's pretty much testing lows at the minute. We had a brief spike below the 0% line, so the daily close will be very, very interesting today. There's nothing stopping it forming a double top, but then again, there's nothing stopping it closing below. So it's all about the daily candle close in terms of momentum for the rest of the week, in my opinion. If we do get a reversal candle off of here, so sort of bullish reversal, then so I'm going to leave that fib back up there. Then do not be surprised to see it rotate and eye back up that previous resistance, or when you got the 50% and the 61.8%, that wouldn't be surprised to go to either one. For even shorter term players, if you want to look at a different fib, then you can bring that low down to that the most previous swing low, which we've just come off the 61.8, and the 50% coincides with this 50-day moving average as well, and also you've got the 100-day moving average just above the 61.8% retracement as well, so that could be an interesting one. I wouldn't be surprised to see that get played out there, so form a nice double bottom, come back up and test one of these fibs, and yeah, just keep an eye on the price action on that if we get there. Aussie dollar, I think we spoke about this a lot in last week's video. It's all about the 0.90 level. That's the key line in the sand at the minute. We had a nice reversal off of that, and it's trying to grind higher, but it's just we're not getting a decent amount of momentum really. If we do get if we're looking at a further bounce up, and it's doing a little bit of retracement at the minute, and keeping out this fib here. I mean, it's not the most technical of fibs. It's not a nice uptrend retracement. It's chopping around a bit, but you've got the 100 SMA here on the 1 hour as well, so keep an eye on that. If we could, I mean, it is been, in my opinion, I think it is due a slight pop up, especially towards this 100-day moving average as well, I'd have thought. But then again, the long-term sellers who have been playing this fib off this big 50% here will just be looking for it to come back down and take out the 0% here. So it's all about the 90 level. If we stay above them, the odds are that will test this 100-day moving average, but if we close below, then I think the 0% line will get taken out. But yeah, you do have some key supports around here as well. Obviously this 0% line, and then this previous low around here as well. So that's a key support, 0.8892, or I suppose you could just call it 0.89 if you want to keep it nice and simple. It should be a key option expiry level, that I'd have thought. So yeah, there's two key supports there, but I think odds are for the rest of the week that we should come up and test this 100-day moving average. But then again, I suppose it depends. If Euro's sort of reverses here, then we would not be surprised to see that bring the Aussie dollar down. To be honest, if we get some dollar strength, then that could bring Aussie dollar. So keep an eye on that sort of correlation between that. Could be interesting. Okay, that's the forex done. Let's have a look at gold. Gold is similar to last week's video. I should have just kept up the same chart, to be honest with you. So it's all about these 1250s, not 1250, sorry. Yeah, it's 1250s. I've done that again. 1250s, key line in the sand. You can see that was previous. I'm just going to zoom in here actually. Previous support here. We had that lovely spike candle and we rotated high. So previous support now turning into resistance, and it's currently capping gold here. So yeah, it's all about the action at this 1250. Look at it any time frame you want. The 4 hours, nice and technical, or even just look at the sort of 1 hour candles as well. So you can see we had some nice upper wicks there at this 1250, and it rotated back down towards the downside. So keep an eye. It's all pretty much all about 1250s. That's the only thing I'm purely focused on. But of course, so let's say we do come up to test the 1250s and we rotate towards the downside, then just keep it simple with the 1200s. That's the previous support here to the left. So just key option expiry levels. The round numbers are very, very technical on gold. And then the next sort of support, if you look on the daily, would be these sort of intermediate spike lows, which are at the 1221s. So 3 key levels there. At the minute, it's just chopping in between these levels. Well, especially the first two. At the minute, the 1221s and 1250s. If you want to look at it in terms of fibs, then this would be the fib that I'd personally be looking at. That's the key, the most obvious previous swing high to swing low. The 50% sort of coincides with the 50-day moving average as well at the minute, and that comes in at the 1285. So that's how I personally have my gold chart set up at the minute for the rest of the week. Okay, then that's all for today. Hope you found that video useful. If there's any other pairs or commodities that you want to have a look out for next week, then feel free to comment under the YouTube video or send us a tweet to our Twitter feed, which is at AGM Markets. Yeah, I hope you found that video useful. Hope you have a great rest of the week trading, and I'll catch you next week. Thanks for watching.